Hello everyone, good evening. This is the trading plan for 30th of June and also a summary of what happened today, how things went by. Today we largely had a negative opening. As I said yesterday, the context was still mildly bullish, but then market was in such an area that forecasting an opening for today was extremely difficult, and so I did not carry forward any positions for today. And we had a negative opening, and then we started to move up basically. And as I am someone who only trades in the direction of larger time frame context, and see who's in control on a much higher time frame, as soon as we slipped into this price zone, the control technically shifted to sellers slowly. And until, as I said, until we take out these highs, at least 15865, I will not be going long. Then the initial reference would be 15935. You can see that we again retrace somewhere around previous day's highs back into the box. This box is a reference that I will be using until I see that using comparative volume analytics, if volumes are built at some other position, if buyers and sellers are transacting at some other position, basically more than this position. Now, if we talk about it, if we talk about today's price action, it was Reliance which mainly did the heavy lifting, the legwork. IT stocks were basically flat to negative. TCS seemed confused. Infosys was flat to slightly negative, but not, I wouldn't say completely negative, since it was not even 1% down at any point during the day after the opening half an hour. For tomorrow, being the weekly and also the monthly expiry, the June month's expiry, my as of now, until we go above 15,859 area, I wouldn't be bullish on this market. I would look to sell the raises. And just because one day's price action basically was in an opposite direction, essentially intraday, the data that order flow provides on an intraday basis showed something different than the larger context. Doesn't mean that we purely use this data, because we only, the high probability trades will come into play when both the context of the market and intraday data provides indicates the same direction, which is not yet the case. So all in all, until we break out above 15,862, my the context of the markets are bearish for me, with an initial reference being 15,676, and then the lower range of the volume analytics zone, which is 15,602. If you look at order flow also just suggested the same thing. Right at open, we saw good amount of selling happening, but then buyers managed to overpower these sellers, and the sheer amount of initiative that buyers had shown today was, to be honest, a little surprising. And uh, we did manage to retrace towards the closing, and tomorrow will be very interesting for us to see, because if we start slipping down, then these buyers who bought in today here at the lows would be the first one to challenge, unless we see larger selling coming in at open, which is more than the buying that happened here. If that happens, I will make sure to update in my Telegram channel. Moving on to Bank Nifty is weaker than Nifty at the moment. Bank Nifty incidentally opened at the extreme range of the volume analytics zone, whereas Nifty opened somewhere in between, and it struggled to move up throughout the day, and it again closed below the price band. So if we get a shorting opportunity tomorrow, Bank Nifty would be my index of preference compared to Nifty. I will not look to buy in Bank Nifty. If I get a long opportunity, I would look to be long in Nifty if at all we break 15,865 levels. If we zoom out things on a slightly and look at things from a slightly larger perspective, and just using the composite profile and not any of the proprietary volume analytics calculations, because I can't share that here. Even if we look at it purely from a composite profile perspective, you can see that the largest volumes are being built in this particular area as of now, because composite profile takes into consideration all the all the candles that is showing on your chart. Whenever you see such a situation that's happening on a composite profile, and always if you are a new volume profile practitioner, if you are new to the entire universe of volume profile order flow, Never ever look at things from a single price point or like point of control or a single or a high volume node, but instead try to look at things from a collective approach. See the price area where the largest volumes are being transacted, and then see what does price action indicate to you at that point. If it is breaking out, then check order flow to see if you are seeing more market buying coming in, essentially buying overpowering selling, buyers showing more aggression. These are the things that you need to look into, take into consideration, rather than simply or blindly relying on a high volume node or just the point of control, because point of control is just one particular point. It has its own uses, I am not saying no, but again, you wouldn't technically want to let the fate of your trade be decided by a single price point, because in the end, market consists of hundreds of thousands of participants, and no no single participant, even if I ask someone share this chart and ask them to draw a resistance line, if not everyone will get it at the same area. So we cannot expect sellers or buyers to start initiating aggressive trades at the same price point. So always zoom out a bit and look at things through a price area perspective, through a price band perspective, rather than simply looking at it from an isolated price point perspective. It is completely fine if you get it a few points, 5 or 10 points here and there, because the the main use of technical analysis, many people think that the single use of technical analysis is to find the direction of the markets. No, the primary use of technical analysis is twofold. One, to identify the probable direction. Again, any analysis that you and I do is based on our understanding of the market, and market doesn't solely move on the basis of my understanding or your understanding, because we are not the one who drive the market. So apart from the fact that technical analysis indicates that is why I use the word probable, indicates a probable direction of price as per your understanding. What also technical analysis provides you is a location to put on a trade where the risk and reward is in your favor. And when you start to look at things from that perspective, 2 points here, 5 points there, literally does not matter. And don't ever think just because you drew one line on a chart at some place, let us say, and market exactly reversed from that line or broke out through that line, doesn't mean that you are exceptional in figuring out price points of crucial price points. Because as I said before, it is not price point, it is price zone. As directional traders, we should never haggle for 5 or 10 points. Coming back, even when I look at things from a little broader perspective, accommodating the price action of the past few sessions, let me go on to a 30 minutes chart. What's wrong with this? Even if I move on to a 30 minutes chart, let's say this is taking some time to load, we'll wait. All right. Now, looking at the price action of the past few sessions, you can see that the largest volume concentration is being built somewhere in this price area. And even volume analytics indicates that this area is important. Volume analytics calculations are slightly different in different market contexts and different time frames. So since it is different than the traditional use of volume profile, I'm not going into that. Since we see a large sized volumes being transacted in this area, with the most recent swing high before the gap being this point. This is an area that you need to closely watch out for. Now, within this price band, if you are a trader who's looking to take high probability trades, Within this price band, again, you will need to go at a microstructure level on a 5-minute or a 15 minutes chart, while making sure that this zone that you marked on the chart is intact. Because, excuse me, because the reason why I'm saying that this zone should be intact is because if you go to a lower time frame, then the composite profiles composition changes. So keeping the zone intact, you will need to go on to a smaller time frame, and then at that point look on an intraday session from a session profile perspective what is happening. If you want to avoid that job, or if your execution speed is not very fast, or if you want to take your trading only through high probability trades, then wait for a breakout or a breakdown of this particular price band. For example, today we saw a breakdown of it, but then right in the opening 15 minutes itself, price started being accepted in the same price band. Again, you will have two options here. Once price breaks out, you will have a chance of putting on a short trade on a positional basis with that particular day's high as your stop loss. Or the alternative would be, if price doesn't break down and starts moving up and testing this particular band, extreme end of the range, then there, if you see signs of rejections on a lower time frame, put on a short trade with that session's high as your stop loss. Again, two things can happen. One, price may traverse to the extreme end of the price band to the downside, in which case you'll be in profit. Or two, it can break out and take out your stop loss. If the second instance happens, because then it would be termed as a successful breakout, that would be the location where you put on a stop and reverse trade. Essentially, your short is stopped out and then you get on into a long trade. Before market opens for a day, make sure to identify and have such structures plotted on your chart, and make a decision to only trade on the rejection or acceptance of these price bands, price areas that you have already plotted. This will make your trading less stressful, and this will ensure that you only trade high probability trades and not focus on every minor move and waste your energy, financial capital, emotional capital unnecessarily, and be burnt out by the end of the day, looking at a considerable amount of a loss or a high amount of charges, even if you manage to break even. I hope this video was useful to you folks. If yes, please make sure to mention it in the comments and like the video. I share my trades in live markets on Telegram. Please make sure to join the channel if you have not done yet. The link is given in the description below. Thank you all and see you tomorrow.